Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Right now let's go back as usual to the discussion of the gold market. Situation here hasn't changed significantly, so you can see due to the existence of the strong monthly resistance, if you remember from our weekly research, that in fact market right now stands in the wide strong monthly resistance area. That also includes the yearly pivot resistance one that has been tested on the Brexit volatility. And right now market has just stuck in the sale of this area, resistance area. It's really wide, 1285, 1350 area approximately on the monthly chart. Also, as you can see here, this market stands at daily overbought, so at least minor retracement should happen, but we guys suggest, at least we hope, that it's probably not just even hope that, but lots of different patterns and indicators shows that market really has chances to turn to significant retracement. And most important issue here is the overloading of net speculative positions, according to the Committee of Traders report. This is very important driving factor for the gold, and it really could make the significant impact on the market, especially, as I said, if we will get the non-farm positive non-farm payrolls policy. In currently analysis, mostly expect this number should be superb on the June non-farm payrolls release. So another reason is that gold markets mostly reacts not on the bad situation in the economy, not on the stagnation in the economy, as many analysts think, but on the inflation. And usually gold reacts very short term on different turmoils. As soon as the pressure and the turmoil has calmed, gold market return back to the normal behavior. Otherwise, gold should really skyrocket on the crisis on the 2008, but it's happened absolutely different thing. So on the crisis, the market shows the downward trend, because on the stagnation in the economies and this lack of inflation. Situation was really poor in the economies, but gold market doesn't show in a rally. And currently, as this United Kingdom is going to abandon European Union, it's really adds more hazard and menace that this will become another spiral of stagnation in economies, and that's will lead to this problem is the decreasing in inflation. And this is not the driving factor to the gold. This is quite vice versa. This is the pressure for the gold to lack of inflation. That's why we do not support the idea that on this possible Brexit the gold market should skyrocket. Absolutely not. So only inflation is driving factor for the gold. But this is really far-going analysis. Currently, we're mostly interested in what could happen really short term. In the short term, as we said in our weekly research, this most important thing on the gold market is this long candle. And usually, when the market forms such sort of the candles, it holds the price action inside of it for a considerable period of time. We do not include the chance that market will fluctuate inside of this range for weeks, maybe 1-2 weeks, or maybe more significant. When the market forms such sort of the candles, the extreme points of these candles takes special meaning, because depending on the direction of the breakout out of this candle, it's usually market continues action in the direction of the breakout. Taking into consideration that we mostly look the bearish, has the bearish look on the gold market in the short term, we expect that market probably could take out of these lows. And as soon as this will happen, this will become the really very strong signal that significant retracement on the gold market indeed has started, and market could continue move to the more deeper support levels. But for that purpose, we need to see first when the market will take out of these lows. Meantime, as market stands in downward retracement, it's approaching to the first area. It's around 13 or 5 This is the weekly pivot point, first fib support, 1360 area. This market stands right now. But we mostly expect that market still probably should reach the next level. This level looks more important. This is confidence support on the daily chart, 1291, 1297. Let's also take a look for this previous top stance. This will be really significant support for the short-term perspective and probably will be important level for a daily chart, and market probably should hit it. On the 4-hour time frame chart, guys, it's really interesting observation. I don't know what we could get as a result of this, but take a look as wedge has been formed. So our brand body trade has started. Market has reached precisely the 1618 extension of this swing down. Sometimes it becomes important for the hand shoulders patterns, but currently, guys, I do not see the shape of the hand shoulders here. It's very difficult to find where to draw the neckline. Okay, but the range is 1618. Maybe we'll get something else here a bit later, but currently it's just interesting that this top stands precisely at 1618 of this range. That's why we mostly currently will take a look at this consolidation, but also we'll keep in mind this ratio, and maybe later we will get some other patterns. But taking a look at this consolidation, we could see that market is forming the butterfly. We partially has discussed this in our weekly research, and we said that mostly we will be watching for appearing of the butterfly here, surrounding some kind of the rounding action, rounding top is forming here, some kind of that sort. And first we will be watching for reaching of the 127 extension of this butterfly. It's interesting because the 127 stands precisely at the confidence support. So that's our first destination point. Right now market stands on the way down to this area, but this action is not really fast, and currently it still remains some kind of the gradual retracement. We do not see any acceleration down that could give us more confidence with the expectation that market really could take it out of those lows of this thrusting candle. Currently it's very smooth action, and it's very important level will be here, because this is also lows of this consolidation, but it's also the weekly pivot point. Breaking through this area could mean that the sentiment has turned bearish, and this could be important because from the pivot framework, if you will take a look at where it stands, the pivot support one, you will see that it stands precisely around the lows and the 618 support 1260 area on the daily chart. That will be, guys, by the way, the daily reversal. That's why this market will pass through the pivot point. This will be also some kind of the bearish sign, but we will see. I don't want to make some far-going conclusions right now. Let's focus first on the first target. So currently, guys, we expect that market should reach the 1297 area and the confidence support, and later we will see what we will get.